Good evening and welcome to the turtlefollower.com, where we teach you how to stop predicting and start reacting. My name is Steve, and in tonight's video we're going to take a quick look at the markets. We had the Fed announcement today. They decided to raise rates, which was not unexpected. Markets seem to like the news, up closing across the board between 1% and 1.5% on all four major indices. So I wanted to just take a quick moment, put out a video tonight, and really just go over where we're at, what we've been discussing, some key levels to look at. So with that said, let's get into it. Here we're looking at the S&P 500 futures, and you can see we've come right back up into the middle of the range. Okay, we've talked about this range between, it's really just about 2100 now. All right. We'll just slide this down. So between 2100 and just about 2000 has been the range, a 100-point range over the last month and a half or so. And here we are right back in the middle. Closed the day 2062, up 25.25 points. Back above the 50-day moving average. All right, we've double tested or double bottomed, I guess you can say, right here at this 1992. We came back in that area around the 13th of November, and sure enough, right back here almost a month later on the 13th or the 14th of December. So here we are, again, right back in the middle of the range. As we've discussed, this trend line was in play. We could probably tweak that trend line a little bit now to incorporate the lows from this past week. And now, again, just in the middle of the range. We've been in this range for most of the year. You could see that evidence of that right through here in this area. And again, we just continue to trade sideways. So, there's really no prediction at this point of where we are. At this point, the only prediction is that we stay in this range. I think that's more likely than breaking down or breaking out of that range. Now, obviously, we know from a market standpoint that at some point these levels are going to be tested. They're going to either break down or break out. But with the news today and the strong move we've had, I would be a little surprised to see us go immediately to 2100, but wouldn't be at all surprised if we maybe consolidated in this range here and then essentially broke out up to that 2100 level. So that's what we're looking at on the futures. Let's take a look at the SPX a little bit and see if that gives us any different indication. All right, so here you can see those same consolidations that we saw on the ES. All right, now the difference here, and we alluded to this a little bit last night, the concern was that maybe we're putting in a bit of a bear flag, or a bull flag, I should say, where we're consolidating. All right, so we had this nice big move higher. Instead of consolidating sideways, you can potentially put a bear flag in. All right, it's definitely a wide one, and then essentially break out, and then all of a sudden be back at those highs. So that is a possibility. Now looking at the SPX, you could see that level of the ultimate highs from the year right around 2130, and there you could see this range here between 2100 and 2113. All right, so that's a possibility. But again, looking at where we are, again, look at this downtrend line that we could potentially come into and sell off again. All right, so preferably I'd rather see us go sideways on the S&P and then break out. Let's take a look at the NASDAQ. All right, so we'll look at the futures first. Similar situation. We've had the sideways action that we've been in for quite some time. The difference is that we are at new highs. We are at new highs on the futures. All right, not right now, but we did make new highs. Let's put it that way, from earlier in the year. With that said, here's that same consolidation. Again, we could probably tweak this trend line a little bit and look at it from a perspective more along those lines. But here we are, all right, back above the 50-day moving average. Not too much room up to this 4730 area before we see some resistance. But support is in place, all right, 4,500, give or take a little bit, is really the level. All right, so until we break out over 4730 or 40 or under 4500, really not much to look at. If we look at the NASDAQ composite, all right, a little bit of a clearer picture. We're not at new highs like we are in the futures. And you can see that we are trading in this wide range. Again, coming up to that resistance point right around 5162. So, it's nice to kind of take a look at the market and the futures. All right, I prefer to look at the futures personally. That's just my my comfort area. But here you can see, we're trading 50.71. We have about 100 points till we hit resistance on the NASDAQ composite. So again, potentially have a little bit more upside to go, but just understand that there is some looming resistance up there that would, obviously limit any gains. All right, here we are with the Dow, and we can essentially remove this. Let's draw this a little differently. So you can see we had that same consolidation earlier in the year, broke down, and now here we are trading between 17,800 and 17,000. And again, not much room back up to that 17,800. So another 150 points or so. And that kind of coincides with everything we've looked at so far, right? We've looked at the S&P, we've looked at the NASDAQ, we've looked at the Dow, and all of them are basically saying, we have a little bit of upside to go, but it's not like we're blasting off to the moon. Now, I could be completely wrong, obviously. We're just looking at this from a price action standpoint and just assuming what has been happening will continue to happen. But ultimately, at some point, that doesn't happen anymore. And that's when you start getting these nice little runs because everybody thought, hey, you know what? The market was going to sell off down here around the 16,700 area. All right, because that's where we sold off before. Ultimately, that doesn't happen. And you get this nice, huge run. And you run and you run and you run until you hit the next resistance point. All right, so at some point that happens again. Whether that happens before the end of the year, who knows? But what I can tell you is right here, right now, you have about 150 points before you hit resistance on the Dow. As far as the actual Dow Jones Industrial Average, not the futures, similar situation. Here is that consolidation. So you're pretty much at resistance right now. You can see that you have a huge amount of room up to the highs from the year of around 18,330. The resistance of this little range that we're in is right around 17,950 or so. All right, and we're trading 17,750. So you got about 200 points in the Dow, and you can see we're still trading along that uptrend that has been in place since the sell-off back in August. So nothing to say right now that the market rolls over and we ultimately start a trend of lower highs and lower lows. But just be aware that right now, if we were to break down, that would start that trend. So we're in a difficult spot here. I think you can still take some trades to the long side. I think you need to be looking at trades to the long side, but understand that your profits may be capped because you may have only a week or so more of this nice little run to the upside. All right, and the last one, the Russell, all right, big breakdown. Maybe this is a false breakdown. Maybe this starts to lead us higher, but you can see this is just a completely sloppy chart. And now here we are trading back below the 50-day moving average, but we are back in the box. So we had 2 or 3 days outside of the box. Now we're back in it. Highs around 1,200. All right, but you can see on the weekly chart, not the best looking setup. If we look at the rut itself, okay, you can see similar situation. Just a big, giant consolidation. All right, as we move sideways, and essentially your resistance isn't until 1,200, but support, you did find support. All right, so where it looked like, it's an interesting comment, where it looked like the futures were breaking down from this higher box. Understand that the rut was really just testing the lows from August. Okay, and then it put in a lower low in September. So here we are bouncing off a key area, 1,100, and looking for it to go higher. All right, so good looking setup there for a potential swing trade. Target would be top of the box. And that's not how I trade. You guys know that. If you wanted to trade, I would look at the IWM. But from a gauge of where we are in the markets, and what we could potentially look for, I would say we probably have another couple days of upside to go. If this little rally that we had today gets sold into, then that's obviously a huge red flag. But at this point, I think we have a few more days of upside, potentially then hit resistance, and then what do we do at that resistance? Do we go sideways and then eventually break out, or do we kind of just get rejected immediately and start breaking down and going back toward the bottom of these consolidations? So that's a key area. You can see here, if you look at these sectors, the biggest sector that's just been completely destroyed has been the energy names. All right, they've sold off hard. On the opposite flip side of it, the the staples are looking like they're breaking out. All right, so the staples look like they want to take us higher. And the healthcare names are starting to prop up a little bit. If the chart wants to load, okay, healthcare names propping up a bit, as we've talked about, resistance right ahead. So just be careful on those. But sector-wise, I think what has been working is starting to work again. The materials, the energy names, they haven't been working, and they haven't been working all year. And at this point, they're still really not working. So, again, if you want to take some long trades, I think you're still in a perfect spot to do it. Remember, we are trend followers. We're not looking for targets. We're not looking for any potential areas of reversal. We're just looking for trends to continue. And right now, that trend is to the upside. So that's the way we're playing it. All right. Members, head on over to your respective model portfolio videos. We're looking at the trading account where we had a couple nice trades that we just closed out of. We're looking at the core account where we are looking to potentially enter another name and maybe adjusting some stops. So, if you're not a member yet and you want to check out those portfolios, right now, just sign up for the premium membership. You get access to both portfolios, whichever one you want to follow, whether it's a trading account for a lot of short-term trades, or the investing account, core account as we call it, for more investments, longer-term trades. Either one is up for the taking. Just have to become a premium member and check it out. All right, thanks for watching, and we'll catch you over the weekend. Take care.